All right, let's begin with the oil markets as we take a look at Brent crude. West Texas Intermediate still a bit on the volatile side. West Texas Intermediate is up, so is Brent crude, and so is natural gas. Take a look at exchange rates. The dollar against a basket of currencies still maintaining its levels. $7 for a euro, 26 for a pound. The yen at 148. Crypto prices still range bound. Bitcoin in the $40,000 territory, actually jumping to 44.6. Ethereum at 2,400. Your European markets to start the day, as we look at the pan-European stock at 600, that's in bullish territory, as is the rest of the indexes in the UK, Germany, and France. Asian markets, a bit of a mixed bag. Hang Seng is the lone bearish indicator there. Everyone else in mainland China, Nikkei, Kospi on the up and up. Now, as we take a look at the numbers from CPI numbers, deflationary numbers, 0.8% drop year on year in January. The forecast was 0.5. December, 0.3. Those are the figures that we're seeing there. Also, China removing its market regulator this morning, getting some indications there that he's been replaced by Wu Qing. That's the gentleman to your right of the photo there is Yi Huiman, and you can see the big numbers there as China's equity market has suffered. SoftBank, though, not suffering. They're rebounding as the Vision Fund has posted a fourth quarter gain with respect to net sales, beating estimates of 12.1 billion. This was in yen, but we converted it to dollars. Gain on investments, $4 billion. Net income coming at 6.4 billion. And then exports, or rather imports from Mexico, coming in ahead from China. It's the first time in 20 years that we're seeing that happen. And then geopolitical concerns continue to hurt the major shippers there. Maersk coming in saying that, well, the outlook for 2024, highly uncertain. And we've got a couple quotes from Vincent Clerc, who is the CEO of Maersk, also saying that, listen, the outlook is quite bearish. There is the impact of this situation causing new uncertainty for how this is going to play out. They're just not sure, and they suspended their share buyback. Efosa Aluyi, who is the head of investments at Sankore Global Investments, he joins us to discuss. Efosa, good morning to you. Happy New Year. Good to see you again. Starting with China, the deflationary environment. What do you make of what's happening with prices there?
Morning, Rotus, and thanks for having me. I think the deflationary pressure in China is part of a broader narrative which we believe is a reflection of weakening consumer demand. I mean, like you highlighted, CPI came in at 0.8, came in lower 0.8%. The expectation was that it was going to be 0.5, coming from 0.3 in December. It's also important to note that this was the steepest decline in 14 years. Since September of 2009, wow. We've not seen this kind of year-on-year decline. Also important to note was that PPI, producer prices, also declined, right? That was the 16th straight month of declines for the producer prices as well. So clearly, those deflationary pressures are, setting in. If you look at what happened with CPI, it was largely on food inflation. You had a 5.9% drop year-on-year in food inflation, and you also had a 17.3% drop in pork prices, which was basically the driver for that food inflation number. Again, like I said, this is a reflection of, consumer demand weakening. And the concern really is around the fact that, the authorities aren't doing enough to really get the economy out of this sort of doldrums that it finds itself in for now. Just on Monday, the reserve rate was cut by 50 basis points. The idea really was to just reflate the Chinese economy. That move was essentially aimed at injecting about $139 billion. That's about 1 trillion yuan into the economy. We haven't seen much of an impact there. I mean, the stock market continues to bleed. The property woes are well documented. So these are critical issues that continue to impact China. And it is a reflection of where China might be. We think that this country is approaching what you might describe as maturity, really.
Interesting. All right, you mentioned the stock market bleeding there. They've removed the head of the market regulator there. Is he being made a scapegoat? What do you make of that move?
I mean, I think these are part of moves to really maybe engender confidence, in investors, but I don't know that it would necessarily do anything. The regulator there really has nothing to do with what's been going on. It's essentially been an issue around confidence, an issue around the fact that that economy is not growing as quickly as it used to grow. If you look at GDP growth rates since 2000, over the last 24 years, what we saw last year, if you take out, 2022, which was really the impact of COVID, it was the slowest growth we've seen in China in about a quarter of a century. So that's really very instructive. A lot of other factors are also coming into play. Like I highlighted earlier, the property crisis, is there. That sector accounts for about a third of that economy. So if that sector is bogged down, it certainly has implications for the broader economy. Also important to mention that China's population declined last year for the first time. That's very instructive, right? If you look at the demographics, 0 to 14 years in China account for just about 40% of the population, while those that are above 60 account for over 60% of the population. So you also have a population that is steadily and slowly aging. That's another issue that China also has to deal with. And if you look at this situation, it throws up parallels between what you have today in China and what you had in Japan in the 80s, right? Where you had that population, starting to decline, and that economy went into what you might describe as a stagnation, a deflation spiral for about 2 decades. So are we seeing China heading into that? Is that what we're going to see? It really remains to be seen. But there are signs that are beginning to show that structurally there are concerns with the Chinese economy.
Thank you for the breakdown, as always, Efosa. So, still on China, what do you make of, I guess for the first time in a couple of decades, U.S. imports from Mexico coming in ahead of China? What do you make of that development?
I think, it plays into this whole mantra of China being the manufacturer of the world, right?
Yeah.
If you look at, China accounted for about 65% of global imports in 2018.
Incredible.
By 2022, that number had dropped to 50.7%. Right? It says a lot about the fact that a lot of manufacturing is also beginning to move away from China.
Yeah.
Now, if you look at wages in China between 2012 and 2022, factory wages had essentially doubled in China. If you look at countries like Vietnam, Bangladesh, and co., those wages had stayed flat. Same thing for a place like Mexico as well. So what that simply means is that all of that manufacturing is moving to places where they're cheaper to do, right? Manufacturing has become somewhat more expensive to do in China over the last couple of years. So you're certainly seeing all of that reshoring that is going to places like Mexico, and they're the ones that are really benefiting from it. Again, this plays into the narrative of us thinking that China is beginning to mature, and maybe some slowdown might be ensuing.
Interesting. All right. I don't know. I'm turning this into a China segment, but massive election in the United States. There is, of course, China has been a major topic of concern there. It's probably likely going to be Biden and Trump if Trump doesn't go to jail. But what do you make of the geopolitical tensions between both countries and how that plays out?
I think geopolitical tensions, from early 22, has been a major theme running through, multi-year theme really running through 22, 23, and will continue this year. So if you look at that, USA-China situation and the elections that we're having this year, about half of the world is voting this year. Taiwan has already voted, right, about 2 weeks ago, and those have implications, right? The party that came to power is one that really not very chummy with China. So that would remain a flashpoint from a geopolitical standpoint, really, and one that we'll have to continue to keep an eye on. Now, in the US, obviously, that's the biggest one that's happening. The outcome of that election has very strong implications for global geopolitics. If you have a Trump presidency, what the leaning would be, how NATO would turn out to be, all of those have very strong implications for what would happen, really going forward. So geopolitical risk, this year is a major global thing to look out for. It has the potentials to upend global growth. It has the potentials to shape global growth. And by that, an extension, global investment returns as well.
Speaking of it, on the same topic of geopolitical stuff now, Maersk, this very bearish outlook that they gave, what do you make of what the company said as far as what's been going on in the Red Sea and everything else?
Yeah, again, a reflection of the continued geopolitical tensions there. Over the last couple of weeks, that situation has essentially escalated, right? We've seen the Houthis continue to attack, and we've seen the US also strike back. How much escalation are we going to see from here on out really remains to be seen. But it is important to note that that Red Sea corridor accounts for about 15% of global seaborne trade. So a lot of that trade now is having to divert, through the Cape of Good Hope. That journey is going to be an additional 7 to 20 days, depending on what you're carrying. Freight costs for a 40-foot container have essentially gone up from about $1,500 sometime in November to about $4,000 today.
My word.
So that's a significant increase, right? And it has implications for companies that are directly hit by it. That's what you're seeing Musk is saying. There's a lot of uncertainty with regards to that. It's not clear how that situation is going to be resolved. The US is trying to, be sort of measured with its response and not create any unnecessary escalation. But again, you really can't bet on anything. That's a very volatile situation. It's a hot button situation that we'll have to keep our eyes on. It has potentials to turn out to really be anything at the end of the day.
Okay, so look, when I don't know how you see this year, you've got the military regimes in Western Africa that have kicked out democratic governments.
Yep.
You've got Russia, Ukraine in Europe. Then you've got the China matter, the Taiwan, the new government. I know all this started in 2023 and so on and beyond, right? But is 2024 shaping up to be a very volatile year? How do you see the year playing?
So you have to add to that the Israel-Hamas situation.
Thank you. Israel-Hamas,
so
exactly.
It certainly is. There are, clouds that are gathering, so to speak, that have the potential to turn into black swan events, right? It might not happen. It might turn out to be concerns that end up to be unfounded at the end of the day. But these clouds that are gathering from a geopolitical perspective have the potential to create a black swan event. And we know what that does to, the economies and to markets.
Okay, maybe on a lighter note, you've talked about SoftBank and their vision fund in the past when their valuations were tanking, but it looks like they kind of turn things around. What does that project for you? Is it a rebound for tech, or how do you see the performance of the vision fund for SoftBank?
I mean, largely rebound in tech, right? I mean, that's a fund that is, essentially tech heavy, right? So the rebound that we've seen so far within that tech universe has certainly played out well for SoftBank. Sort of very strong rebound in ByteDance and Co. Those are, some of the very heavy names that the fund carries. So obviously, as those, names start to do really well, you're certainly going to see it filter through to the performance of the Vision Fund. And again, tech really seems poised to do very well even going forward. So clearly, the potentials, in terms of return or performance for that fund look really well stacked up, at least over the next 18 to 24 months.
All right, so putting all this together, if a client comes to Sankore Global Investments and said, Efosa, how do you see this year? Are you cautiously optimistic? Are you a bit bearish? What's the? I mean, I know you don't have a crystal ball, but
I think we're probably shifting to some paradigm that is slightly new, and people kind of have to get used to it. We're going into a world where we don't believe that inflation is going to go back to the zero that we had in the developed world.
Right.
We don't think that interest rates are necessarily going to go back to zero that we had in the developed world. So these are things that are going to be new, and people have to find a way to sort of navigate it. Ensure that your risk is properly hedged. Like I highlighted, you have some events really from a geopolitical standpoint that have the potentials to really create some, deep concerns, for the global economy and for global markets. So it's a year where things are shifting, and we have to be aware of them, really.
Interesting, fascinating stuff, and we're glad we had you to take us through it all. Efosa Aluyi is, of course, Head of Investment at Sankore Global Investments. Thank you so much for your time.